let's just take a look at that shilling and the stocks that weakening shilling is likely to impact. If we just look at consumer stocks, we see the impact that this is going to have on inflation, given the fact that we have imported goods and fuel continually pushing inflation higher in the country, currently sitting at around 12.95% in May, rose for 7th straight month. What do you see playing out in terms of companies that are likely to be affected by this weakening currency?
Well, thank you very much, Samantha. That's a very good overview of our market. Just like you mentioned, we are seeing a bit of a concern right now, especially because of what we are seeing, especially on the currency front. One of the key concerns right now is key importers, especially looking at our market where we rely a lot on importing, especially of things like fuel, as well as also raw materials for some of the productions that we are seeing, especially looking at industrial stocks. And most of the other companies that rely a lot on consumer goods like Uchumi, as well as other consumer producers that are listed on the bourse, we're going to see a lot of impact in terms of how they perform. And just like you mentioned earlier, we are seeing the market still indicators, especially the NSE 20 has been below 4,000 for quite a while now. I guess also another indicator that most investors are now pulling back and concentrating more on being able to meet their basic needs as opposed to investing more in terms of the market.
Apart from consumer stocks, like you mentioned, Uchumi, we've also got Kenya Airways. Just looking at exporters and importers of machinery, which stocks on the Kenyan front are likely to be impacted by the rising cost of raw materials as they have to import goods at higher prices?
We're looking at it in terms of, just like you mentioned, you're looking at people who are like Kenya Airways, which relies a lot on fuel for their fleets. Also looking at it in terms of the industrial fronts, we see a lot of the industrial companies, especially looking at it in terms of people like Adiriva Mining, Bamburi, who produce a lot of cement in terms of their production. Also looking at it in terms of the fuel cost and how it can impact, because we are seeing a bit of a concern in terms of energy generation. So Kenyan might also be affected on some front because it might end up relying a lot on fuel to be able to meet its needs, but also looking at it in terms of the economy as a net importer. We are seeing a bit of a concern in terms of how even companies will be affected, because looking at it from even knock-on effect in terms of the general economy, we are seeing even banks being affected indirectly because the investors might not be able to have enough money to save and even to be able to put into investments.
Talking about those banks, we've seen a bearish trend on banking stocks. The one outlier, though, BBK, has managed to sustain some upward momentum, recently announcing a share split, perhaps because of that. Why are we seeing a bearish trend on the banks, which are set to release half-year results in the coming months?
Well, looking at it in terms of especially what you're seeing on the macroeconomic front, it seems like the market, especially looking at how we began the year, going far above 4,000 points, and then as the year continued progressing, we saw the market beginning to recede. It's almost an indicator that investors are also trying to pull back to be able to reflect what is happening in terms of the economy, because right now we have downgraded our projections to around 4% growth, and that is definitely going to affect most of these companies' performance. Also, the other thing to note is that most of these companies are already trading either ex-dividend, ex-bonus, ex-split. We are seeing a lot of foreign activity on Barclays, which might push it significantly, but that might not be sustained, especially once some of this demand is already filled in. But looking at it in terms of the anticipation, the declining in the price is already an indicator that most investors are not expecting supernormal performance as we saw last year on some of these financial stocks.
How are you positioning yourself in the banking space in anticipation of the first half results?
Well, looking at it in terms of most of the counters that we've been seeing shedding off points, we've been seeing KCB dropping, we've seen housing finance dropping, we've seen cooperative bank dropping. I would be very keen on seeing these stocks getting to the bottom and opting to get in, and also looking at it in terms of the anticipation, in terms of some of the counters that we're expecting to be listed on the market. We're seeing British American Insurance may be coming in, TransCentury might also be coming in, and because of that, it's also a time to be able to still put aside some cash just in preparation for such opportunities that might still arise.
Let's talk about those listings announced yesterday, that apart from British American Insurance and TransCentury, we've also got Deacons, which is a clothing retailer that's set to list next year. What kind of appetite would you see for that stock, given the fact that we have purchasing power at this stage set to look on the softer side?
Well, looking at it in terms of listing, especially on our market right now, well, looking at it, last year would have been a perfect time to list because last year was a fairly good year for us. Well, looking at it in terms of this year, we are seeing agriculture front is not doing very well. We are seeing now inflation is fairly high, but also next year because of the anticipated elections and all, it's also presenting a bit of a challenge in terms of listing. But looking at it in terms of the product offering, especially for our market where we have only around 56 listed equities, it's a good opportunity for them to get in, unlock their value, bring in a lot of investor loyalty, especially in terms of being able to get ownership, and also in terms of being able to raise capital. In terms of appetite, well, I guess the challenge will be the issue of numbers. We are hoping to be able to see how they have been able to perform previously and also their strategy going forward, because we are seeing the Kenyan market being a market that especially foreign economies are trying to take advantage of as an emerging economy. And so because of that, we are seeing interest even in regional retailers and also international retailers like Walmart wanting to come in. And so for Deacons, I guess it will be a strategic opportunity and also a very big challenge for them to be able to come up with a very key strategy in terms of how they're going to be able to position themselves in the market.
Transcentury have come out, they're a private equity firm, valuing their shares at around 47 shillings. That gives the company a total market cap of 12.5 billion shillings. They're set to list later in the year. What kind of appetite would you see for that company? Would you be buying into the stock at that price?
Well, looking at it in terms of the trading price prior, because it has been trading on the over-the-counter market where we saw it trading as low as 35 to 40 shillings. Well, looking at it as the introduction price of 47 would be a bit of a concern. Or hopefully, we are going to be able to still digest the numbers to be able to see whether that price to earnings is going to be sustainable, especially for such a stock. But looking at it in terms of the potential, especially earnings potential going forward, we've seen Transcentury has been able to diversify its investments and also position itself very well in some key sectors, especially energy as well as cable production, and because of that, it's going to be a very promising stock. Looking at it in terms of their listing, it's a very welcome move, and definitely I would be a buyer once demand supply settles in.